Hi everybody, Mr. Edelman here with another screencast. Today's an exciting day because we're starting a new unit. We are going to be learning about investment and how to invest responsibly in the stock market by buying a diversified or a varied group of investments, which is really, really important. And so this coincides with our essential question, to what extent is investment gambling? Because I'm sure you're all aware to some degree of what gambling is, right? Whether you're betting on horses, you're betting on sports, you're playing cards, right? There might be some skill involved, but there's also a lot of risk involved. And so the same things, the principle occurs for investing in the stock market, but there's strategies that you could use like diversifying, buying a collection of different investments, not putting your eggs in one basket. Um, and there's some historical trends also that we're going to take a look at that will give you the proper mindset and framework for investing in a way that is responsible. So first off, why is it important to invest money as opposed to just putting money into a savings account, right? In which you'll earn a very little rate of interest, but your money might not grow and compound in the way that you want it to. So if we look at this chart, it says 10-year annualized returns. So annualized means average. So what's the average amount of money people are earning on their investments? And again, this is from 2004 to 2013. And there was a recession in 2008 with the housing crisis. Right now, we might not think of that. We were probably focused on our recession and the slumping economy right now in the pandemic, but the economy was not doing so well at this time. So these rates are going to be very conservative and fairly low. So like, for instance, the S&P 500, which is an index fund and tells you typically on average how stocks are doing, it's about 7%. And historically, it's closer to around 12%. So these rates are conservative. They're a little bit low. But you can see that inflation right over here is about 2.4%. And so inflation's bad because it eats away at the value of your money. Inflation means prices are going up, right? And so if prices are going up, you can buy less with the same amount of money. So it's really important to invest money because you want to get a rate of return that is above inflation. So for instance, like a savings account, you typically earn an interest rate that's below 1%, maybe around 0.6%. So this means actually, if you're earning a little bit of interest and you put your money in your savings account and you think you're being responsible, in some respects you're not, because your money is going to decrease in value because it's lower than the rate of inflation. So that means that we need to find things that are going to earn us typically a higher rate of return. And those are bonds, which is a loan to a company, and you loan money to basically anyone because you expect that money back plus interest, right? And typically the average interest for a bond is 4.6%. So you can loan money as a bond to a corporation, um, a municipality like a city or state, or the national government, which is known as a T-bill or a treasury bill. Okay, and you're going to buy one of each of those in the stock market platform. You're also going to invest in some individual stocks. So some companies are publicly traded. You can go to the New York Stock Exchange and buy um, anywhere from one to thousands of shares of that stock. A little, one piece of stock is like a little slice, a little pizza slice in that company. The company being the whole pizza pie. And the S&P 500 is an index fund. And so what that does is it looks at the 500 largest companies in the United States and on average how well they're doing. And so that's very similar to something called a mutual fund, which is a collection of stocks. So if you don't want to put all your eggs in one basket, meaning like don't invest all your money in one company, you can buy a mutual fund, which is inherently diversified and you're buying ownership in lots of little companies. So I typically invest in mutual funds because they're less risky and they're tied to more average annualized returns. But for the purposes of learning, we're also going to invest in some individual companies, probably some companies that you've been interested in and followed for a period of time, but maybe not in terms of for a financial reason or purpose. right? So those are our three different types of investments. We have stocks, collections of stocks are known as mutual funds. Um, the one that gives you kind of the average look at the economy is known as an index fund. The most popular is the S&P 500. You probably also heard of the Dow Jones. We're going to invest in bonds, which is not ownership of a company. Doesn't make if you buy a bond, it doesn't make you an owner. It makes you a loaner. You're loaning money to that company, but you don't have any say in terms of how the company operates. And there's three different types of bonds. There's corporate, municipal, and government bonds. So like national government treasury bonds. Okay, and that's what we're going to be investing in. Some people invest in commodities. Those are like goods like oil, gold, pork bellies you hear sometimes. Those are commodities. We're not going to invest in commodities, but it's something that people trade that you can also buy and sell on the stock market as well. Okay, so a few things that you should have opened while you're doing this. So you should have our stockmarketgame.org website opened. That's important. And I also recommend that you go to, you can use your phone, iPhones, you have the stock app, or on your computer, you could just go to Google Finance. Let's type a company that everybody has heard of, Amazon. And I want to look at Amazon, especially, let's see, we want the Amazon stock. Okay. So in case if it doesn't bring you to Google Finance immediately, if you type in the name of the company in stock, it'll take you to their stock symbol. So this is a stock chart. This is really, really important if you want to get an understanding of how much a company is worth, and if you want to buy a share of the stock, how much it's going to cost. Like right up here, I can look at this is the current price for one share of Amazon stock. It's $2,367.61 to buy one little share of that company. Okay. And you can see how it's changed since yesterday. So that's day one, how it's gone. It went down and then went back up, right? Stocks fluctuate in price on a daily basis. And also, if you go to Max, you can see from when the company first became public, right, around 2000, you could see how their stock price, it remained relatively stable. And then it started to take off in 2012. And now it's increasing exponentially all the way to that price for one share. Okay. So most companies, if they have a long history, if you click Max, you should see that how it increases over time. You could also take a look at their 52-week high and low. So in the past 52 weeks, this was the least it costs to buy one share. This was the most it costs to buy one share. And you can see that the price now is fairly close to the 52-week high. Amazon's got a lot of press recently because, again, during the pandemic, people are even buying less in stores, and the trend is even before this, people are buying less in stores and people are buying stuff online, and their sales are through the roof right now. And so that might coincide with the fact that if you look, let's see, over the past month, right, that there was an increase in their stock price. People probably feel very confident in the company, especially now since they're doing such good business. So let's say we want to buy some Amazon stock, right? How would we do that? Well, in the platform, you log into Stock Market Game. Okay, you go to enter a trade, and this is a stock trade, right? Because we're investing in one single company. I have to log back in. Okay, here we go. Trade, enter trade, stock trade, buy. Now again, you need to use the symbol. So any publicly traded company, they have a symbol. You can copy and paste it or just remember it. It usually looks like an abbreviation of the company's name. Order type, you're going to keep market, numbers of shares. So you have $100,000 to invest in this simulation. And we said that one share was about $2,000. So let's say we want to buy 10 shares, okay? And limit price, you don't need to put that down. I have to put my password back in. I think it was that one. Confirm trade. Okay. And that's it. It says trade order confirmed. It's going to go to pending transactions, right? Because typically what happens is like you'll put in an order to buy an investment, and it's executed sometime like during the day, and then it show up on your account the next day. Okay, so that's how you buy a share of stock. The next thing that you need to do, right? So that was one of our types of investments. You should buy at least 3 stocks, is a mutual fund. And there's different ways you can search for mutual funds through this the system here, but it's also good just to do some your own research as well. So when I invest in mutual funds, like in real life, in my own actual portfolio, I use Fidelity as my account transaction, and so often like I have various funds that are bought and sold through Fidelity. So you can search this, you can search just like best mutual funds, and you can see they have a symbol name. And if you click on them, you can learn more about the funds as well. What's cool about mutual funds is you can invest in an industry. So like let's say you think the healthcare sector is going to do really well, or the tech sector. Like you can buy a mutual fund that is invested in many different technology companies, right? So like buying that mutual fund, it might be invested in Apple, it might be invested in Microsoft, and perhaps Amazon as well. So let's see, best mutual funds, technology. So this is one I'm actually invested in. I own this, the Fidelity Select IT portfolio. Okay, and so this is the stock symbol. It's FB stocks. So let's put that in. FB stocks. And let's see if we could. This is being a little slow. You can see just like a stock how much one share costs. So this is loading. I have a lot of things open right now. It's probably around $100 a share. So let's let that load. Let's put in, we'll buy 10 shares of that as well. You're gonna have to put your password back in. Confirmed your trade. Okay. So we bought a stock, we bought a bond. I'm sorry, we bought a stock, we bought a mutual fund. Let's see if this is loaded yet. Here, so one share right now is about $73. And you can read all about it and see what companies they're invested in, right, as a mutual. So the last thing that we're going to do, okay. The last thing that we're going to do is we're going to invest in a bond, which again, a bond is not ownership of a company, but you're loaning money to a company for a fixed rate of interest in return. So you're going to buy, and then you can click bond symbols. And again, you want to buy one corporate bond, one municipal bond, and one government bond. So let's click municipal bond. You have to start off with what state you want. So let's look New York. Let's search. Okay. And you can see like, look, these are different municipalities. Arlington, New York, you can probably find New York City, right? You can buy a municipal bond in pretty much any city or state. Here you go, New York, right? It tells you you get a 5%